Hey, good morning, everyone. I wanted to introduce you to myself again. My name is Rags to Riches, if I want to call myself by my moniker. And the idea of this page is to help you guys understand the markets, finance, what I'm doing in my personal portfolio, to give you some insights and perspective as to how you can make adjustments to your own, or also for educational purposes and things along those lines. The goal of today's video is not to actually do any kind of high-level breakdown of a trend or a thematic idea or a new investment that I'm engaging in, but actually to walk you through some technical analysis that I've been doing on my personal growth portfolio to give you insights as to the types of assets that I'm investing in, why that's the case, and the kind of thesis behind why I hold these assets. And to do so, I'm not actually going to show you my Fidelity account, as every single portion of that page will display my account details, which you are not going to get to see. Sorry, guys. But rather, I actually use a platform called Webull for the purpose of technical analysis. And I think this would be a good chance for you guys to see what I'm holding and why it is. So first, we got PAVE. It is a ETF from Global X that tracks a index of stocks related to the infrastructure trends happening in the United States. As you can see, price performance has been very good this year due to the Inflation Reduction Act and a few infrastructure bills that have been passed by the executive branch of the White House. Price right now is sitting at $30, and I'm looking at a price target at $32. The longer term thematic trend that I see with PAVE is that infrastructure in the US has been massively underinvested for the past 30 years in the United States, and eventually, just to allow the facilitation of trade, transport, commerce for people to get from one place to another, the country needs to massively continue to invest in our infrastructure. If you've ever been into the New York City Metro and tried to use the subway system, some parts of the subway are great. Some parts are absolutely atrocious. Some parts don't work and you feel like the train's about to fall off the rails. And for major metros and cities like that, there's a massive amount of investment that still needs to take place. And moreover, if you're trying to go cross-state, cross-country, your only option are the major highway systems, which were built after World War II. And sure, they can get you from one place to another, but is this the most effective means of transportation? Can we do something similar to what Japan has done with their high-speed railway systems? In my eyes, I think that's the case, and longer term, I do see this as a potential place to get returns. Moving on into the next holding, I have Dollar Tree. Now, Dollar Tree has been jumping off a cliff, but if you look out into the longer term chart, very healthy, essentially exponential, and I look at this as more of returning to a mean. Now, there are a few lines on this chart which are going to signify what I deem to be important from a technical analyst perspective, right? We have a longer term trend, which is the line that I drew, looking at the mean price throughout a period of time, the time sector in which I'm looking at. Then we have a Fibonacci retracement from the most recent all-time low. I'm viewing that as the 2020 pandemic as a start. And then the all-time high that was put in looks like around April 29th of 2022. Now, we've retraced down to the 61.8 level, meaning that there's been a big correction as far as price is concerned. I really do believe in Dollar Tree. The thesis behind this is that they have essentially what's a monopoly in lower to middle income America. If you've ever driven across big parts of the country and seen really small community towns, there's generally speaking going to be maybe a convenience store, maybe a gas station, not even a grocery store, but there will always be a Dollar Tree or a Dollar General. Cool thing is they're actually held under this same ticker symbol. The company owns both stores. And what Dollar Tree is doing is undercutting what would be placed for local markets and local stores to actually provide basic goods and services for everyday essentials. You can think of things like some grocery items, toilet paper, laundry detergent, and all these items are so cheap that any other store that would like to come into the space and actually take up any market share are unable to do so. For that reason, every time I go to Dollar Tree, I actually do some basic shopping there because, again, it's the cheapest price for what would be considered, relatively decent items coming out from China. I get the same thing at Walmart. And every time I go there, I see people literally loading up their carts, in part because it's the only thing that they can afford, but because it's the only option that's around. I live in what would be considered a food desert in a major metro, and for that reason, a lot of people shop at Dollar Tree. Is it ethical, what they're doing? I think that's a broader question that's more philosophical and political in nature, but not for me to opine in. I do have faith in the Dollar Tree idea and the company, and accordingly, I'm going to continue to invest in it. Now, heading up next, we have a stock that had IPO'd during the 2021 period. This is Corsair. Corsair is still trying to find price discovery here. So as you can see, we had an IPO price of $14, shot all the way up to 51.37. Nope. Retraced to $10.96, and then we're trying to find support here. I think we're likely going to retest the all-time lows here. Now, I did not invest in the IPO in any of these prices. I began the dollar cost average at the start of 2022, so we are down on the position right now, but Corsair as a company I think is really interesting. They're making computer parts, cooling components for CPUs and GPUs, random processing units, RAM, essentially anything computers and gaming, they're involved in it, and I think they're the leader in their space, and that's the main reason why I'm investing in them. Now, gaming as a sector is growing rapidly over time. I think gaming is going to make an increasingly large portion of young people, think millennial, Gen Z, potentially Gen X's time as they age, and accordingly, as they have higher levels of income, they're likely going to spend more into the space, as gaming habits have not changed since I've ever seen the industry be in place since I was alive. And accordingly, I do want to get some exposure to that sector. I do think it is tech, but also consumer cyclical. It touches on a lot of vectors of really just thematic trends that are happening in today's society. Now we're going to get into some more controversial picks for the growth portfolio. So we got Cathie Wood's ARKG. Price performance has been mixed. As you can see, during the pandemic, we had what could otherwise just be seen as unseen returns, 5x in a period of 1 year. Of course, that's completely retraced and gone actually past the highs prior to the pandemic and the stimulus from the Federal Reserve. The idea with ARKG is that there are genomics companies and gene editing companies and companies related to health and biosciences that are rapidly evolving their level of technology that are going to have a massive impact on the world. Imagine a period in the future where you can go to the doctor, they do a blood sample, understand exactly what illness that you have, and then can tailor a solution, a new type of bacteria, type of medicine that can potentially alter your genes and make you better in a period of a week, a month, a year, curing regenerative diseases that otherwise wouldn't have a cure, that would be incurable. Those are the kind of problems that the companies at ARKG are trying to solve, and that's why the fund ARKG is actually investing in those as well. This is a trend which I don't see going away for the long term. The question is when profitability emerges, and for really high volatile stocks in the biopharma and medical sector, price performance like this has been pretty common during the pandemic. Unlike healthcare, which is normally a late cycle play, you can think of companies like UNH, where if you need to go to the doctor, if you need to get basic medicines, you will go to the doctor and someone will pay for it, whether insurance, your bankruptcy, the government, somebody's going to pay for the medicine. But with new technologies like this, the question arises and when they'll actually have enough market share to make a profit from, and that's when I see this fund taking play. So in the meantime, I'm going to continue to buy up shares and build up the position here. Now, the next fund that I have ownership of is ARKW. This is another Cathie Wood fund. I'm a big fan of her investment style, in part because I didn't buy in the peak. I've been buying ever since the beginning of 2022 because I've seen that the historical performance is phenomenal. It makes my benchmarks look really stupid. And accordingly, if you can buy them at a good price, then maybe you can see some good performance here. ARKW is a next generation internet fund where these connotations of new technologies like Web3, the Internet of Things, blockchain technology are all intersecting into what we are now using as the internet. And ARKW is trying to get exposure to these trends, part of the reason why I'm investing in it as well. Now, moving on to the next fund, we have another Cathie Wood fund. So this is ARKF. This is a ETF that tracks companies that are disrupting the traditional financial space. So let's actually go into the profile here. Then asset allocation. You can actually see some of the top 10 holdings that ARKF is investing in. So we got Coinbase, Shopify, DraftKings, Square, also known as Block, Twilio, Path, Robinhood, Intuit, Mercado Libre. These are all companies that in my eyes are using technology and the internet in a way that major legacy companies are not doing today. I think the release of the iPhone 15 is emblematic of this exact trend. When you have what's essentially a monopoly, why do you need to continue to innovate? And that's what a lot of these companies are doing. Now, heading on to the next holding, we have ARKX. This is a newer ETF from the Cathie Wood lineup. This is a bit different than what I think people understand it to be. While it's considered a space and exploration innovation ETF, what I really would consider this to be is a satellite ETF. Many of the major holdings in this ETF are actually tracking, holding companies that are involved in the satellites and low space orbit industry. And I think that's going to be increasingly important as we head into a more internet-focused, interconnected future. While it would be beautiful for us to go on vacations at the Mars in our lifetime, I don't see that being the case. But I do see interplanetary travel to places like the moon or to space satellites orbiting Earth as very possible within this near future. Think of companies like SBCE, Virgin Galactic, going on repeatable missions up to space is an example of this. And then ARKX is the way that I'm trying to get exposure to that trend. Sorry, as you know, I'm having a drink of energy drink in the morning. I gotta hit the gym in a few. So our next holding is going to be FIVG, the 5G the 5G ETF from Defiance. I think this is a really interesting ETF. This is essentially tracking companies that have exposure to the 5G trend. Performance has been in line with expectations, staying above our trend line that I drew here. Recently is retesting the, what is this here? The 61.8 Fibonacci retracement level. Price performance has been good. I do think 5G, in the same way that communications, 4G, 3G have been impactful in historical periods, 5G is going to do a very similar thing, and accordingly trying to get exposure in this way as well. Now, quantum computing is a newer field and technology that's been coming out. I guess you could consider myself in some respects a tech investor, as I think that's where the highest potential for returns are. But what quantum computing is a new type of computer that isn't operating on a binary code, zeros and ones, but is operating on, not really sure the word for it, but it uses zeros, ones, and twos. And while that may seem like a very small difference, this is the difference between having the computing power of a single computer versus one single computer that could run all the processes of today's planet. These companies, I think, are going to be majorly impactful as the rise of AI and automated technology begins to impact and spread into the economy. And that's part of the reason why I have participation in the trend as well. Now, my next holding is going to be Hydrogen from Global X. This is the HYDR ticker symbol. Performance has been abysmal, as hydrogen is a extremely new technology, but the idea with hydrogen is that we have goals and ambitions as a society, as a culture, of having an energy transition, of using cleaner sources of fuel and energy. Hydrogen is a interesting play to get exposure to that outside of solar and wind. The idea of hydrogen is that if we can actually use hydrogen molecules to store energy for the long term, then perhaps that can be used to power in a renewable sense, because hydrogen is abundant within the universe and especially on our planet, to fuel long-term industrial travel, rather than using diesel gasoline to fly or to drive trucks, or to use jet engine fuel to fly planes from the US to the UK. Perhaps we can use a fuel source like hydrogen. Now, because the sector is so new, because the sector has very little levels of profitability at this time, we're going to see similar price performance, and I'm very much down on this position. However, it is one that I do see potential into the long term. It's one that I'm going to continue to invest in despite of price performance, and we're going to have to see where the cards play. I don't think solar and wind are going to be the only solution to our renewable energy challenges, and accordingly, should hydrogen be one of the beneficiaries of this change, I want to get some exposure to it, which is why I have shares. Next up is the Global X blockchain ETF. As you can see a trend here, I like Cathie Wood and I like Global X. This is the ETF that is tracking companies that are involved into the cryptocurrency and blockchain sector. We have companies that are doing cryptocurrency mining, cryptocurrency exchanges. Basically, if cryptocurrency is a part of their business plan, it's likely a part of this ETF here. Now, it did go through a reverse stock split after it hit what is now the low of $12.04. I had actually sold off some holdings because I had dollar cost average from, call it, $37 down to $12, made 100% profit, sold here at the top, and I'm waiting for really more consolidation before I start to buy back into the fund. I thematically think that blockchain cryptocurrency technology is going to be massively impactful into our society and financial sector. That's part of the reason why I have this into my portfolio, and I candidly can see an all-time high of above 155 coming back into play. The question is not if, but when, and that's more related to the Bitcoin price than anything else. So until then, we'll continue to invest. Now, another ETF that I have ownership of is KROP, and let me actually adjust my FIB retracement level here. KROP is a global X fund tracking agriculture and food innovation companies. You could think of any company involved with the production of food and agriculture as a part of this ETF, and one of the reasons why I invest in it is that we have such a rapidly rising population, and we have ample food for everyone on the planet, but the question is, how can we make food that is not only abundant, plentiful, not going to harm the environment, but it's also going to be resilient to economic and ecological changes. In many parts of the planet, there's desertification occurring right now, and in those regions, it's very difficult to actually grow crops in a way that's sustainable. Companies like Nutrien, Yongluping High-Tech Agriculture are involved with actually genetic editing of seeds and foods for them to be grown in these more hostile environments, and I do think longer term, once enough time has passed by, once there's been enough price discovery, and once enough investment is put into the space, we'll be able to see some profits from that sector. Next up is going to be Aqua with Global X. This is Global X's Clean Water ETF, a newer fund launched by Global X, and really like a lot of the ideas with this is that in the same way that food is going to be an increasingly short supply as the population continues to rise, so is clean water. For that reason, you think of a lot of utility companies that are involved with turning seawater into drinkable water, water purification plants, water treatment plants, things along those lines. Those are the stocks that this fund is tracking. Now, the next ETF that I have ownership of is BUG from Global X. This is their cybersecurity ETF. I think as we head into an increasingly global and digital age, the threat of cybersecurity is going to continue to increase. I'm not sure how many times you've been told to reset your password for your Facebook account, but I think it's time you do so because your password information is now publicly available for the world to get on the dark net. And for that reason, I think having increasing levels of cybersecurity, not only on the individual level, but more importantly for the corporate level, is going to be extremely impactful. Price performance has been very good, staying above my trend line, and accordingly, we'll continue to invest into the long term. Next up, we got eBiz. So eBiz is the e-commerce ETF of Global X. It has a number of holdings which you're probably familiar with: Williams-Sonoma, Bookings Holdings, Mercado Libre, GoDaddy, Amazon.com, eBay, all the big players in the e-commerce space. I think the pandemic has taught us that it isn't necessary to do your shopping in person. I personally think there's a benefit to it, because what if you want to try on clothes and see if they, one, look good, they fit you, and they feel good, right? But an increasing amount of commerce is going to take place online, and a part of that is just due to the cost efficiencies of doing so. When you have an online retail store, you don't need to have a lease or a building or employees to manage customers. You can just have a website, a customer service AI chatbot, and a shipping logistics method, right? And because the costs for doing e-commerce are so much lower than that of retail stores, it's my personal belief that much of the shopping that we're going to be doing into the future is going to be done online, especially as we build out our infrastructure going onto the paved way, right? A lot of these trends that you're seeing here are going to be intersectional. And as we get better at shipping across goods and services in the country, companies that track these trends that are actually going to be the beneficiaries of them are likely going to do well. In addition to that, part of the reason why I have ownership of it. DRIV, this is a pretty self-explanatory one. This is Global X Autonomous and Electric Vehicles ETF. If you've seen their price performance of Tesla, I think you have an idea as to why I hold this, but in the same way, this whole idea is about thematic trends, ways that the economy is going to be changing. I do think that electric vehicles are going to be the next generation of automobile technology. Every time I walk out the house, I see a Tesla driving around, and companies that are helping out with this trend are going to be a part of the portfolio. Think of companies like Google or Nvidia with their AI technology, Tesla and Apple, who's actually trying to release a new car, Intel with their chips for the actual machines that are inside the electric vehicle, right? Drink my energy drink, so bear with me. All right, so next up we got bots, Global X Robotics and Artificial Intelligence ETF. Bots is a really interesting fund, which is tracking companies that are involved within the AI and robotic space. In the same way that the advent of the internet and the personal computer had changed our world fundamentally, I do think AI is in the beginning phases of doing that. I think many people are familiar with ChatGPT, funnily enough, and you can actually see from my screen, Microsoft is actually building that in to Windows. Let me open this here. This is literally AI, so let's just test it out. Hi, tell me a joke. Just wait. No, no, thank you. So as you can tell, AI is like making its way into our— shut the frick up, autopilot. My God. Thank you, autopilot. Kind of awkward. But my point there is that AI is slowly creeping its way into our lives. Get involved into the trend now, because this thing is going exponential. It's literally built into Windows. Anyway, going on to the next fund, we have BIF or BFIT. This is the Global X Health and Wellness ETF. Obesity is a massive problem in the United States. It's becoming a massive problem across the rest of the world. People are trying to get healthy, fit, and firm heading into the summer and into next year, and candidly at all times, because people are just fat. And then also, I think there's a rise in athleisure, right? Rather than people wearing suits and ties to work, they may be working from home and might want to wear joggers in the house. And for that reason, I think companies that are involved in that sector are going to do well. I think of companies like Lululemon, great leggings for any ladies in the audience here, Puma, Adidas, JD Sports, Bellring Brands, all companies that are involved in the athleisure and fitness sector, right? Now, getting into a bit more some of the interesting holdings here. Talking about the renewable energy trend, we have URA from Global X as well. This is a ETF that tracks companies involved into the uranium mining sector. Going into my thoughts on renewable energy, while I do think that technologies like hydrogen, solar, wind are going to be increasingly impactful heading into the future as far as providing energy in a more renewable sense, they're not ever going to be able to make up the base power supply load that is needed to power major cities like New York, like Chicago, like London, like Belarus, etc. And for that reason, we need a stable, powerful source of energy that perhaps isn't from hydrocarbons. Now, the place in which I see this actually emerging and being applicable is going to be with sectors like uranium. Uranium is the highest per density source of energy that humanity has ever found. It is a technology that has emerged after the advent of World War II, initially used for more destructive needs. And while there hasn't been investment in space for geopolitical and war-related means, there is, I truly think, a place for uranium to change fundamentally our views on energy and how we actually approach our lives. If we can get control of nuclear power, and candidly we already do, but get comfortable around the use of it and do so in a way that's sustainable and safe, this could fundamentally change how we operate in the world. Imagine a world where when you turn on the lights, it doesn't cost you any money because it's so cheap, your bill per month might be $1. That's a world that uranium could produce, and that's part of the reason why I'm investing in it. Talking on some more renewable energy trends, we got PBW here. This is with Invesco Wilder Hill Clean Energy ETF. This is giving me exposure to both wind and solar. Price performance has been mixed throughout its inception, right? IPO'd at, what is it here, $59, called $60. Hit an all-time high of 108. For decades, it has been stagnant, and then during the pandemic, when these trends really started to accelerate, we saw according price appreciation. Now, of course, we're retracing back down to what was the mean level during the past decade, but longer term, I do see this as a secular trend that as more people get solar, as more people involve themselves in wind, water power, etc., this will be the beneficiary ETF or fund for it. Now, TAN is similar to PBW, but it's solely focusing on solar. This has even more ridiculous price appreciation outcomes, right? Initially came out at 307. There were a few stock splits, part of the reason why I went down all the way to $12. This may have been 50 cents before the splits, and accordingly here, we saw a very similar trend that we saw for PBW. Pandemic hits, people recognize the trends, had a bunch of cash to invest, price spikes up. Now we're seeing a retracement here down to $47, and I wouldn't be surprised if we hit 20 again, but longer term, this is the trend I see being extremely profitable into the future. All right, a few more holdings here, so we're going to blast through it. We have OBORD. This is the Crane Shares MSCI One Belt One Road ETF. If you have not heard of the One Belt One Road ETF or just project that China's been pushing forward for the past few years, you need to look into this. Essentially, they're trying to create a road infrastructure and seas maritime transportation belt from China all the way to Europe, reinvigorating and reinventing the Silk Road that was present in I guess you can call it antiquity. And I truly believe that they are going to do this project, if not for commercial and economic means, for political ones, and that's part of the reason why I'm investing in it as well. The ETF has a lot of companies in the Chinese banking and industrial sector. There's a lot of parts of China which I think are too early stage to invest in and to be worthwhile actually purchasing. I think of their, candidly, China is like a great place to invest. It's hard to point out where China isn't a good place to invest. So invest in China if you think that the US is sometimes in a weak position. All right, so we got the Nifty 50 here. Play on India. India is one of the largest and most rapidly growing economies in the country. You have more people in a daily basis rising into the middle class. You have a extremely high working age population. These are just secular trends which are going to continue to benefit Indian companies, and as they continue to gain presence and power on the global stage, so their companies will be beneficiaries of these global trends. In a similar vein, and this is kind of like playing off the whole BRICS nation idea, Brazil, Russia, India, China, and then South Africa, we have EWZ. This is an ETF that is tracking Brazil. Price has been okay since the ETF's inception, but Brazil is one of the largest economies in South America. Main reason why I'm holding it is to get international exposure. Now, Japan is an interesting one. I think since the Japanifications of the 1980s, Japan has been trading sideways since longer than I've been alive. But Japan is one of the leaders in technology, finance, things along those lines, and it's one of those companies, or not companies, countries, that is fundamental to the global economy, that is making waves as far as innovation is concerned, and it's one of the main reasons why I'm investing in it. Now, this one is going to be a bit more of a controversial play. This is a ETF, VanEck Africa ETF. It's tracking companies in actually Africa that are potentially going to be profitable. Now, I think Africa is a untapped sector, region of the world that there's going to be a large place in people's portfolios should there ever be political stabilization within the region. You got companies like Anglo American, In-Home Mines, Comintel BK, Comac Group, Airtel Africa. The play with Africa is similar to what we're seeing take place today for Singapore, South Korea, China, India. At some point, investment in Africa is going to take off into a higher place that it's been. There should be regional stability, at least I hope, in my lifetime. And then accordingly, there is more natural resources, more people, more intelligent people. There is untapped potential in Africa for, countries to develop and prosper and grow, and to have a chance to actually build up positions in that region of the world now, despite the volatility that you might face in the near term, I think is a worthwhile venture for myself. Now, getting back into the renewable energy trends here, I actually invest in coal. Thanks. I actually invest in coal. So the idea with ARCH is that they're a coal company that's sole purpose is to be investing in the production of coal. Now, coal is an interesting sector in so much as that despite the trends of renewable energy being present, electricity today in the United States is primarily being generated by coal. Now, that is changing over time, but as the coal sector industry becomes increasingly pressurized by the forces of renewable energy, the companies that are going to be present are going to have a increasingly large market share and higher profit margins. ARCH has been a beneficiary of this. We've seen rapid price appreciation from, what is that they call it, $18 up to $175. I do see this trend heading into the future continuing, in part because of inflationary forces and some of the things that I was talking about there. Dexcom, very simple play. They make technologies and medical tools for people with diabetes. I don't see diabetes going away, and Dexcom is the way to profit off that. Now, GameStop is an interesting one. As you can tell, I was a part of the GameStop mania, had a really good time short squeezing all the hedge funds when that went down. I truly see GameStop as a beta play, completely uncorrelated returns to that of the traditional stock market, solely trading off of technicals and volume and sentiment. There's an underlying thesis with the GameStop trade, which involves gamma squeezes and delta hedges and all these financial terms, which I think are going to not be worth our time meandering upon. Should there be even a 0.001% chance that GameStop goes to $1 million, by holding a single share, I'll be a millionaire, so that's why I hold GameStop. Now, a few more here to go. So we got Lemonade. Lemonade is a new company that came out that is using AI, artificial intelligence, to change how we fundamentally get insurance. I've been a customer of Lemonade since 2020. It is a phenomenally great service. Their consumer claims process is really simple. They always pay out. Their default rate is pretty low. I think insurance is one of those industries which is a bit archaic in so much as that they have formulas for how they can actually assess the risk of individuals when they're granting them insurance. Perhaps those formulas are not the best, and that's where I think the power of AI is going to be beneficial in that trend as well. Four more to go here. So we got Cabot. Cabot is a chemicals companies, particularly working with hydrocarbons. One of the most impactful things that I think Cabot is doing today is their role with the emerging technology of graphene. You can think of graphene as a hexagonal shape of carbon layered and stacked upon itself. Graphene has really interesting applications, whether it's for constructing more dense materials, and more particularly with battery technology. One thing that is being innovated and worked on right now is a graphene battery, and you can imagine if a graphene battery is put into a phone, imagine charging your phone in 20 minutes and it lasting a week. That's the kind of electricity storage that we're talking about with graphene rather than something like lithium, and big reason why I'm investing in the trend as well. Now, I think every portfolio needs to have a ballast, and that's why I invest in the Vanguard Growth ETF VUG. Pretty simply put here, this tracks large cap companies in the US that are considered to be growth denominated. Performance is in line with benchmarks, makes up about 30% of the portfolio. We got EWW. Going into the emerging markets trends that I was talking about before, I do think Mexico is a place where there's going to be large potential for returns heading into the future, especially as there's increasing regionalization from the Western world and the Eastern world. The US's best trading partners have always been and will always be Mexico and Canada, just because China is cheaper for the time being, and there's also India as another competitor. Mexico is going to be not going away anytime soon. Finally, we got SPEM. So all the different places in the world that I don't have allocations to are covered by this ETF. So I have essentially with this portfolio, a global portfolio investing in thematic trends, trying to change the world, that are disruptive in nature, that are going to take over what I think is going to be the future of the economy. And I think long term it's going to be profitable. So I think the plan from here on out, since I do need to prep for the gym, is to make videos in a similar nature to this heading into the future. Once a week, touch base, see how the portfolio is doing, kind of give you my thoughts on big trends that are happening into the economy. I hope you enjoyed walking through the charts with me, getting a bit of an explanation as to my thought process for the portfolio. Let me know if you like this content. I'm happy to change it to whatever is helpful for you guys, because I candidly just enjoy talking about the markets and stocks and crypto. And if this is valuable and beneficial for you, then it would be my pleasure to continue to talk about this. So let me know what you think. Until next time, enjoy the rest of your day. Be sure to continue to dollar cost average, and eventually, one day at a time, we will turn our rags into riches. So until then, we'll talk soon.